Good day, everybody. Justin Wood here on the Mark Pfeiffer team, Mortgage Mark, giving you a weekly update to see what's going on. A lot of fireworks this week, and I'm looking forward to talking with you guys about them. So let's get started. Happy June 16th. All right, weekly rates. So mortgage bonds, they kind of bounced off this lower Fibonacci level here. Obviously, if you've seen the news, you know that the Fed was looking to make a historic move in hiking rates today. So when rates go up, yeah, it's always a concern, right? Because they need to cure inflation. But at the end of the day, interest rates will impact your affordability, but it's not always a deal or no deal situation and put you out of the market completely. So let's take a little bit of see what Freddie Mac is doing right now. Now, these are reported as of today, with generally speaking, what Freddie Mac is showing as the rates. So quite a climb from last week, up to 5.78% and 4.81 on the 15-year. And these are your average of the points and fees yet. So keep in mind, these are Freddie Mac's as a ballpark only, but it should give you a general idea as far as what rates are doing today. The Fed summary, so they did hike the rates by 75 basis points as expected. It's the largest rate hike in 28 years. Now, the median dot plot shows the Fed funds rate at 3.4% end of the year. It basically means that another 175 basis points over the remaining 4 meetings could be on the radar. Now, they are, tapering like we talked about and taking step by step just to see how it impacts the market right when they hike the rates. So rather than rip the Band-Aid off completely, they're kind of going step by step. And whether you agree or disagree with that is probably a conversation for another day. But at the end of the day, they did increase them by 75 basis points yesterday. And then as the chart shows, this could be 50 in September, 25 in November, 25 in December, 75 in July. So we will certainly see what happens. Over the last 6 months, rates have increased from 3.25% to 6.25%. Principal and interest on the same loan amount increased by 42%. Now, house prices on average have also increased by nearly 15%. It basically means the climb can result in about 63% of all those things. Now, Fannie Mae's National Housing Survey, released on June 7th, showed that 79% of buyers said it is a bad time to buy a home. There are issues with affordability, inflation, home prices, and it's the lowest buyer sentiment in record since the survey started. So a lot of doom and gloom out there as far as home buying goes, but let's take a little bit of a deeper look and see, what this changes. Because on the upside, there's always a glass half full, right? The market is slowing, but it's not collapsing. Home buyers are those that really wanted a home. It far exceeds the listings or the inventory. So demand is still greater than supply, which is very important to make sure there's not another housing market crash or nothing that would happen like 2008. Now, the homes will sell. Most buyers will finance their purchase. So at the end of the day, there still is demand for mortgage bonds and what they're doing. Now, with U.S. home equity, it did hit its highest level of record, right? So when you're looking at the chart and from the Federal Reserve, it's a $27.8 trillion with a T, right? That's more than the B or the M, right? So a lot of equity is out there right now based on the current market. And you can see that, in this first chart here, dating back to like 2005 or so, they were at a good spot, but obviously down with the big market drop. Now we're all the way up to here, guys. That's almost double the levels just in the past 5 years. A huge amount of it too. And then if you look at the chart over here, you've got home equity line of credit, cash out refinances, right? Dark blue is the home equity line of credit, and then cash out refis represent the blue bars. So those we're going down here, obviously, to be expected in the past 1 years, but now they're on their way back up. So very good data here to look at and see how much equity is available in your current home. Now, the school district general homestead exemption, it's issued an increase for 2022. May 7th, they approved a constitutional amendment increasing the general homestead exemption from 25 to 40,000. It only applies to school districts though, right? As much as we love those exemptions to apply to all the taxing authorities, it's just to school districts. So big takeaway, if you're currently receiving the general homestead exemption, you do not need to reapply to receive it. So nothing required on your part. If you're already a primary homeowner here in Texas, then you don't have to do anything differently. Now, the software vendor has updated the exemption tables with the increased amount for Collin County, and the 2022 certified appraisal roll to be completed in July will include the exemption when the actual tax bills come out, usually about October or November traditionally when they do come out as well. That's effective earlier this year, so that's good news for us. Even though we have seen taxes go up, at least we know the exemption for the year and the tax saving can help a little bit. Bob Brooks, our good friend with Prudent Money, will be hosting a webinar. So please scan this on your QR code, pull out your phone, scan it, take a picture of it. And Bob's going to cover 3 important topics. And guys, if you have not listened to Bob speak about this stuff, he is phenomenal at breaking everything down, making it clear and easy to understand, and gives a really good wrap of what's going on. He's going to cover how bear markets really work, an investment that has consistently made money in past bear markets, and what steps to take. It's only 30 minutes. He can take a complicated study, make it relatable, so basically anybody can understand it. A few key takeaways. So guys, take 30 minutes of your time and then get on that webinar just to get an idea of what the information is out there. It's going to be a live Q&A at the end, and I really recommend that you get on this. So again, take your phone out, scan the QR code, and then make sure you're on that with Mr. Bob Brooks. He's an incredible advisor. Outside of that, I want to thank you guys again for another fantastic week. We're getting a lot of phone calls these days. That is still a good sign the phone is ringing. But as always, if you need anybody to give you a call or give you, a sense of peace in this turmoil, let us know, and we're happy to help. Thank you guys. Make it a fantastic week.